Boo! At the open, all-time high for the S&P 500.
It's your boy Jimmy.
Now, what's worth doing is worth doing for money.
Straight from y'all street to Wall Street.
Anybody tells you money's the root of all evil, doesn't make up half.
Dudes wake up, hope their girl turned on so they can get a little bit. Only woman in the morning, I wanna turn on this. Deck it quick. While the average man looking at this sad like she fine as it. I'm over here looking at tails and whips like by six. I left the mayhem for the market. Now I don't want a dope spot, I want a stock pick. I know that booty got dropped, triggered my stop losses, but I ain't got time for your wop. My V-wops crossing. Rich with hot V's and pushing hot keys. Strategy and plans to make grand. Still in my wife beater. Batman pajamas, house slides, and about 5 hot picks for the day. Cause I like the way the Dow bounces. 4 hot dips on call, so I got options. 2 with a lot of volume, 1 with a double bottle. Now I know dumb money don't understand. Am I talking about my trade or just thinking with my MACD? You see, we different in the way we move. You move with kittens and your dog, I move with bears and bulls. I got a green thought, grow with the marijuana. Waking up with the fun, some commas. Jump out of bed, big profits. Eat my bacon and eggs, big profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. They used to watch me move them packs and stop. Now I watch moves in the NASDAQ profits. Used to run from the ATF and them cops. Now I run down ETL, make profits. I jump out of bed, make profits. Eat my bacon and eggs, make profits. Light up, watching them candles, profits. While I'm still in my sand, making profits. See, me and Jim Cramer been talking mad money. Said today I'm taking a risk. They got the feds coming, but I got support here with me. I call a short squeeze. You get the drop, she pull the trigger, and abort these. If she stay on my watch list, I might have to wife her. But I know better. I'm a true trading group lifer. Call up the Wolf of Weed Street. It's time to flip some profits. Go ahead, be hawking. Get your spot here. I'll double top that in the head and shoulders. Hit them up with this resistance. Watch them roll over. Cause I see John Wicks in contract. If I say I make $1 million a day, well, that's a large cap. You moving average, that's why you get crossed. Get split, get delisted, and knocked off. And I'm setting the whole block off. I'm buying GameStop and selling them roadblocks off. Jump out of bed, make profits. Eat my bacon and egg, make profits. Light up, watching them gain, make profits. While I'm still in my sand, making profits. They used to watch me move them packs. Stop. Now I watch moves in the NASDAQ. Used to run from the ATF and them cops. Now I run down ETF. Hey, my family. Hey, go, what we doing, my man? Hey, make profits. Hey, Shug, Mike, what we doing? Hey, make profits. Yo, Wolf, Professor, what we doing? Make profits. That TTG money gang, making profits. We some snipers.
Hey yo, what's up, everybody? What's up, everyone? Hope you all are doing well today as the markets have made fresh new lows and it is official. The S&P has reached correction territory. We still have not gotten a real bounce. I keep looking for this bounce. I've actually somehow managed to make money long the last 3 days. I've made money long. Palantir, Meta, Tesla, the SPY, as I keep looking for this bounce. And I know I've been saying it for the last couple of days that I think that a bounce is very, very close. But I really am starting to think like we might even bounce. I just sound silly saying it because I've been talking about this for the last 3 days. So I know it sounds silly. I feel silly saying it. But I think that we could bounce tomorrow. Today was a very low volume sell-off type of day, and you broke underneath what a lot of people thought was a tradable low, and there was no acceleration to the downside once that low broke. You actually then recovered, and you actually bounced back to the upside. And I do think that that low that was put in place today could give us a tradable bounce. And I am going to be looking for, again, coming into the day tomorrow, I'm actually going to be looking long again for some long setup to try to catch a move back to the upside. So I'm not saying that the bottom is in or the low is in. I do believe that the markets are going to trade a little bit further to the downside, but I think that we can get a tradable move back to the upside that can take us back to the 560s or so. And maybe tomorrow could be a day that gives us a little bit of a relief bounce, being that we broke that low today. Very low volume, no follow through, bounce back above it. And I think that we can maybe look for a little bit of a recovery and a relief move tomorrow. So that's what we're going to look for. My name is Michael Edward Parinati. I go by Michael Edward. I'm the co-founder and head trader of True Trading Group, for those that don't know. We are the Benzinga FinTech Award recipient for Best AI Analysis Tool. We actually received that award last year, a couple of months ago. My business partner and I were in New York City at the Global Benzinga FinTech Awards ceremony, receiving that award. And it's nice to see industry leaders like Benzinga recognizing True Trading Group for what it is that we are doing, with AI technology, implementing it onto our platform, helping our members make money. Level 3 analysis. We actually had a lot of our members are beginning to use the level 3 data that we get. We have a partnership agreement with the NASDAQ directly, where the NASDAQ provides us with a level 3, a true level 3 data feed that allows our traders and our members to identify, where institutional orders are and institutional flow versus retail flow, and to help us really make better decisions and determine what levels are going to hold, what levels are going to break. Where the big buyers and where the big sellers really are. And it's been a really crucial part of this last month sell-off, because a lot of our members have been able to identify that heavy selling pressure from an institutional standpoint to stay on the right side of this. And that's why we've had a huge month inside of True Trading Group. And I don't just mean the month of March. I mean like this whole month sell-off. This sell-off has been happening now for a little bit less than a month. It started kind of towards the middle to the end of February, and it's continued right now all the way into the second week of March. And it's been huge. It's been huge last couple of weeks. One of our moderators, Shai, I think has had one of our top 3 biggest stretches that she's had in her trading career. As she's been all over put options to the downside on this, on individual stocks, swing trading these names. She's been all over Apple and CrowdStrike and just a bunch of other names that she's been sitting on puts and been able to rip those things to shreds. And a lot of members have been following those trades. It's been a really great month. We come in here now and, before I kind of talk about what my thoughts are with the markets and what I think is going to transpire tomorrow and the positions I'm going to be looking at, I also want to make sure you guys realize that, a True Trading Group, it's not just about awards and, the NASDAQ is nice and Benzinga is nice, but we're also the fastest growing and highest rated premium online educational platform that combines university level trading and investing courses with premium stock market tools, live workshops, individual coaching and mentorship for stocks, options, crypto, and futures. We day trade, we swing trade. We also cover long-term investing, which I'm going to be doing probably within the next month. You're probably going to see me start to buy some stuff in my long-term portfolio. As we enter correction on the S&P, I definitely want to start putting some money to work because I do not believe we're going to have a recession, but I do think we're going to have a slowdown. I will be wrong on that if 5-6 months from now we're still talking about tariffs. I am in the camp right now that I don't think tariffs are going to be here for a very long, extended period of time. If I'm wrong about that, which it's a total guess. I mean, nobody actually knows what's going to happen with tariffs. Nobody knows when are tariffs coming off. How high are they going to be? When are they going to, what's going to get moved lower? What negotiations are going to take place? What countries are going to renegotiate? What countries are going to lower their tariffs against us, which would then result in us lowering the tariffs against them? Because don't forget, April 2nd, reciprocal tariffs. Any tariff that another country has on us, we are going to slap the exact same tariff on them. And all of these countries have higher tariffs on us than we have on them. So the tariffs are going to go all the way up. So who's going to negotiate? Who's going to bring their tariffs down? I have no idea. Nobody really knows how long this is going to play itself out. But a game of chicken with tariffs, I mean, with everybody, it's mutually assured destruction if nobody negotiates. If it's just you raise this, I'll raise you more. You raise this, I'll raise you more. Then you raise me more, then I'll raise you more. If that's all it's going to be and no one's going to come to the table, then everybody's going to fall into a recession. The whole world would fall into a recession as the trade dynamics change. So that's just why I don't think that it's going to, everyone needs to talk tough. Everybody has to talk tough. There's not you got to remember all the leaders of these other countries, they also got elected too. So they can't nobody can just roll over and be like, sure, whatever you want. They have to talk tough, but when push comes to shove and the tariffs are actually on and it's starting to hurt their economies, how long do these fights last? I don't know the answer to that question. I really don't. I don't know the answer to that question, but not many of these countries could afford to play the game of chicken, and neither could we. Right? Nobody can really afford to play that game without really slowing the economy and falling into some type of recession. But part of the reason why I don't think that you fast forward 6 months from now, we're still talking about tariffs. Hopefully that's the case. So that's why I don't think that we're going to have a recession. But if I'm wrong about tariffs, then I most likely will be wrong about recession. If you're 6 months from now, we're still talking about tariffs, then I'd say that the chances of recession are not just possible, because right now it's possible. I don't think it's probable. If tariffs are still here in 6 months, then I'd say that recession is not just possible, it's probable. When you take a look around right now, credit, the credit markets are really going to tell the tale, and credit markets are extremely stable right now, extremely stable. Credit spreads are as tight as could be. They've barely moved. They've barely budged during this sell-off in the market. And right now, when you take a look at what the bond market is doing and you take a look at what the credit markets are doing, they are not showing signs of imminent recession. It doesn't mean a recession is not possible, but the bond market and the credit markets are not showing signs of imminent recession. But the market, the equity market, is also not saying that we're having a recession. The markets would be significantly lower right now if they really thought we were having a recession. But you're just not, that's the sentiment. That's the fear. Everyone's starting to feel that and everyone's starting to get nervous. But credit spreads, when there's real issues in the economy and there's a recession looming, credit spreads start to blow out. Credit spreads will start to widen. And you really haven't seen that. So as long as that's stable, it's a correction. It's a slowdown and it's a correction. I don't think it's a recession. I don't think it's a big crash and a big bear market. Now, the Russell might enter bear market. The NASDAQ might even enter bear market. But I don't think the S&P or the Dow enters bear market. Certain areas of the stock market might get hit harder than others, but from a broader standpoint, the Dow and the S&P as a whole, I don't think enter bear market territory. But again, I'll be wrong about that if I'm wrong about tariffs. Okay. But anyway, before I get into all that, why should you listen to anything it is I discuss on this channel is probably a good question you might be asking. And you're like, well, I think the reason why you should listen to the stuff that I talk about on here is because I was trained by professionals on Wall Street. It was my first job out of college. I was working at T3 Alpha Fund in New York City. They had me go through a training program before they let me touch $1 of their money. Then 2008 happened, and that was the Great Recession, the big stock market crash. But it's also the same year that I received one of the firm's Trader of the Year awards. Now you fast forward, I'm the co-founder and head trader of True Trading Group, along with my team of 8 other professional full-time trading mods and an over 30-person staff. We've helped thousands of members from all over the world to reach their goals. We have 10,000 members in 114 different countries. Okay? That's a pretty damn big community from people from all walks of life and all different parts of the world, all different experience levels. So if you guys are new to the channel, make sure you subscribe, smash the like button, turn on your notifications, make sure you never miss out on these live streams. We're dropping golden nuggets on a regular basis, giving you guys free lessons, trade ideas, analysis, and commentary to help you guys make money. At the end of the day, that's all that matters is your ability to make money. Doesn't matter how much money that I make, because none of the money that I make, not one of those dollars is going to go towards paying your bills. So it really just matters. All that matters is your ability to make money. At the end of the day, again, that's why you guys are all here. Okay. So let's kind of go in. Let's kind of talk more about this. Yeah, Andre, that's a good point. I was just reading your comment. That is a good point about the weaker dollar helping out some of those big macro companies. Yeah, I mean, it's a delicate situation. The macro view is definitely a delicate situation. Investor sentiment has completely flipped. It's actually shocking how quick of a 180 it would happen with investor sentiment. The night of the election, investor sentiment was through the roof. The markets gapped up, rallied to new all-time highs. Everything moved higher. It was risk on everything. Bitcoin went nuts. Softwares went nuts. All tech stocks went nuts. Banks went nuts. Financials went nuts. Everything went nuts. It was like peak optimism. And then all of a sudden, in the middle of February, it was just like tariffs and a complete 180. And investor sentiment is now completely shifted. And it has everything to do with tariffs. The markets have told you the last 2 days that tariffs is really all that they care about, because you got really promising economic data the last 2 days. You had a lighter than expected CPI number yesterday. You had a lighter than expected PPI number today. You actually had negative 0.1 on the month over month PPI number. Analysts were expecting a plus 0.3. It was a negative 0.1. That's really good numbers on the inflation front. And you got lighter than expected jobless claims. That's also good news. Markets didn't care. S&P's down 1%. And what's the headline that drove the news today? Well, Trump said, Europe, if you don't remove your tariffs on U.S. whiskey, we're going to tariff your wine and champagne 200%. And that offset the lighter than expected PPI number and the better than expected jobless claims report. The markets care right now about tariffs. And the reason for that is because the markets can't price it into their risk models. The markets can't see down the road. Markets are forward looking. And when the markets can't see 6 to 9 months into the future because something is in the way, the markets get very upset. And that's tariffs. The markets have no idea how long these tariffs are going to last. The markets have no idea. April 15th. What countries have tariffs on and which ones don't? On which products and which products don't? How much? Is it 100%? Is it 75? Is it 50? Is it 25? Is it 15? Is it 10? Is it 0? Which countries have them? Which ones don't? Who negotiates a new trade deal with the United States? Who doesn't? Who's stubborn? Who's willing to play ball? What country lowers their tariff against our goods? Which ones raise them? Which countries posture versus which ones come to the table and ask for a meeting with our trade representatives? I don't have the answer to any of those questions. Neither does the market. And that's why the market's focus is tariffs. Trump made some very aggressive comments today with really like standing his ground, not budging on tariffs. And the markets reacted to that. Markets reacted to that. And the markets ignored the good PPI numbers. But oil's been coming down. We're kind of stuck in the mid 60s. Oil went from like $80 a barrel down to like 65, 66. If you can get oil below 60, that would be really good. That would really help inflation. But it's all comes down to tariff news. And you got the reciprocal tariffs April 2nd, which is why I don't think the markets are done going down yet. And there's a lot of uncertainty around April 2nd. And I think volatility could increase as we go into that. But for the time being, I think the markets are oversold. I have said that for the last 3 days. I know that. And we have still not bounced. But we've also still not really gone lower. You can see we've kind of just been sitting here. I'll go to a 3-minute chart or a 15-minute chart just to make it easier on your eyes. Like we've really just kind of been going sideways, slightly lower. Obviously we made a new low today, but very, very briefly. Okay, we made it very, very briefly a new low, but we've been, this acceleration to the downside, you can kind of just draw across these bottoms and then you can see it, you're trying to kind of hold this in here. I don't know. With today's low volume on this sell-off, I would not be the least bit surprised. I wouldn't be the least bit surprised if we don't have a tradable bottom there and you get something that looks like this tomorrow. I do. I think you're going to get something that looks like that tomorrow. So I'm coming into tomorrow looking for longs. I'm not coming in looking for shorts. I think that your time to look for shorts was over the last month. I think buying put options or shorting stocks down here is very risky because nothing goes down in a straight line. Nothing goes up in a straight line. You guys have all realized that by now. And we are oversold based on a lot of different metrics and a lot of different technicals. And when the markets finally do snap back, as they will at some point, it's going to probably be a 2.5% up day on the NASDAQ. You'll probably get you're going to get 2.5% up move on the NASDAQ. And everyone's going to chase that long, and it's going to continue to fuel the long because nobody wants to miss the bottom. And it will bring buyers in once that move starts to happen. I don't believe that move is going to last all that long, maybe a couple of days. I do think you'll run into resistance in the high 560s on the SPY, meaning in here. I do think that area would be resistance, but I do think that we can bounce up into that area and do that. So what I'm looking for is I'm trying to catch the long into this level. And then once we get back up into here, then I'm going to look to, build back into my short positions and then see if I can then get a move back towards the downside and then make that new low going into the month of April when everybody starts to get, nervous with the reciprocal tariffs too. And then I'm going to do a lot of buying. If I can get this right, I should be doing the bulk of my buying in my long-term portfolio right in here. Right. That's kind of the target area that I'm looking at. It's kind of like right in here. Okay. This is kind of the zone that I want to really be buying. I want to buy into this area. Okay. So over the course of the next month, if we do get more downside, just know that that's the area that I'm going to really start to buy some stuff. And I'll just scale my way in on the way down here. in my long-term portfolio, as again, like I said, I don't believe there's going to be a recession. So I'm not looking for like a 35% drop. I'm looking for maybe a 15% drop in the S&P. Right now we're down 10. So we got a little bit more to go to get into a deeper, run-of-the-mill recession. The average drawdown correction. The average drawdown of a correction is 14%. So, we're down 10. I'm looking for a couple of points more, and then I'm going to start buying some stuff. Okay. I'm not going all in. I will still have some cash available in case the markets do go lower and in case tariffs are here for longer than we think and things, really deteriorate later in the year. So I will still have some cash available, but I am going to be a buyer. I am going to be buying stuff. Members of True Trading will know exactly what it is that I'm buying when that takes place. Okay. Get it? Got it? Good. Yeah, as I'm saying, it's not just day trading and swing trading at True Trading Group. It's also long-term portfolio stuff. We cover it all. I publish a market outlook report every year. And we said it. And true or false, members of True Trading Group, you guys can just say true or false. In my market outlook report that was published in the beginning of January, I said I believe we're going to have a correction this year. True or false, members that read my market outlook report. It's a free report I send out to members every year. I've done it now for the last 5 or 6 years. But I was calling for a correction coming into this year. So, and like I said, members, you guys can just say true or false, because obviously those of you that are not members, you have no idea because you're not part of the group. So you don't get any of this content. So this is not really a surprise. This is exactly what we expected. It was growth scare correction, but not recession. And I'm going to buy that growth scare and I'm going to buy that correction. So that is still my viewpoint. And I still plan on doing exactly that. Okay. So, and what are the areas I'm going to buy? I'm going to buy software. I'm going to buy tech. I'm going to buy financials. Financials are selling off really hard because people are worried about a recession and they're worried about the economy, and recessions are not good for the banks. Banks are just a product of the economy that they are in. And if the economy is struggling, the banks aren't going to do well. They're not going to be able to lend out as much money. They're not going to be able to loan as much money, get that interest. There's going to be defaults on loans. It's also less IPOs, less mergers and acquisitions as the economy slows. And none of that is good for any of the banks. But if it turns out that you avoid a recession, the economy is actually okay, and tariffs go away, then you're left with the administration that's focused on deregulation in the financial sector. The CFP, that getting kind of, the less money that companies have to spend on compliance, that goes right to their bottom line, like stuff like that. I mean, I think that you would be in a deregulation environment for the banks. And it would be, I think that would be a really good thing for financials if you avoid a recession. That's the big if. But if there is a recession, then the banks all have more room to the downside. Everything has more room to the downside if you actually have a recession. I just don't think we're going to. I just don't think we're going to. But a deregulatory environment without a recession, interest rates coming down, lower capital requirements. I just think that's an environment that I want to be long. So, and then all the software names. All these software names got a little expensive, like Palantir got really super expensive. I own Palantir. I love Palantir. Buying more Palantir. I own Palantir from 21 and change and buying more. But these stocks got really, 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 really expensive. And they had to cool off. These valuations were just out of control. And they've all cooled off. But I think the software names are going to have their time in the sun over the course of the next couple of years as the AI, the next stage of AI evolution is going to be, monetizing all of this, like the application rollout and monetizing these AI agents. And that's where the software companies are going to come into play. So, speaking of software companies, one of the companies that I like is Rubrik. This is one that I do own. I actually bought this for my daughter as well, Rubrik. My daughter was born in July. I bought it a couple months after she was born. And they just reported earnings, and the stock's up 12%. 258 million versus 233 million expectations. They only lost 18 cents a share. Analysts were expecting them to lose 39 cents a share. So it's a top and bottom line beat. I hate when it does this. Hold on, guys. All right. Anyway, so Rubrik now trading up 12% on the day. It's up like 15% after hours because it was red on the day. But you're still moving higher now. You know, this is one of those names that I like. And nice move here to the upside. This is Rubrik. So this one looks pretty good. Nice move. Great earnings. I mean, it's a small company. They're not, but it's a nice bright spot in the world of tech stocks that have just been getting smashed. It's nice to see Rubrik back to the upside here. 64. I like Rubrik long term. It's one of the tech names that I like, one of the software names I like. All right. So there we go, folks. Anybody have any questions for me? Nice. Way to go, Susie. You bought some at 55. I love that. Love that. Now you're at 64 and still pushing. Love that. Way to go, Susie. For people that are on the live stream right now that are not members of True Trading Group, what I will actually also tell you. Well, first, you might be wondering, well, why should I join True Trading Group? Well, the answer for that is quite simple. Our members make money. Don't believe me? Cool. Watch this. Members, do me a favor. Type the number 1 in chat if you're making money, if you're becoming better traders because of TTG. Just go ahead and type the number 1 in chat right now. Again, just go ahead and type the number 1 in chat if you guys are making money with us. It's a simple question. It's what everybody wants to know, right? Everybody wants to know, do your members actually make money? Well, we got over 10,000 of them from 114 different countries. Not every single one of them is killing it, but the large majority of them are. Okay. And that is really should really be the deciding factor on whether or not you join a trading community or a platform like True Trading Group is how do the members actually do? It's not enough to just see, oh, well, how does the moderator, how does the pro trader, how do they do? And that's not enough. It doesn't matter how good another trader is. They have to be able to alert you to their actions and educate you on what they're doing, in such a way that you're able to actually act on it and you're able to actually make money from it. You don't join communities like True Trading Group to watch other people make money. You do it for one simple reason, for you to make money. It's all that matters. Nothing else. Way to go, Lloyd. You grabbed Rubrik at 31.41. Oh, what a price. Yeah, you got a much better price than me. Very nice, Lloyd. Congrats on that one. I'd hold on to that one for a little while. So yeah, that's what matters most. That's what I'm saying. That's why it's better that you guys, you check and see how do members actually do. That's why I like to ask that question on the live stream. So for those of you that are not members, I told you guys this yesterday. We're doing something real special for people that want to join True Trading Group. I'm not telling you what the price is. I'm not telling you what the special gift we have for you is. If you're interested and you're serious about this, I just very simple want you to send us a text message and we'll give you all the information that you need. I don't want to make it public here on this live stream because we're giving away something real special that I don't want anyone to be able to point back to on the live stream and be like, oh, but wait, but you did this. I'm not doing that. Okay. So if you were interested in joining True Trading Group, I got something real special for you. Send a text message to 1-888-621-2127. The phone number is at the bottom of your screen. Again, it is 1-888-621-2127. You also get a double your money back guarantee when you guys join TTG. It's very simple. If you can't make back your membership fee at least once after going through the courses, the quizzes, and attending one study group, we don't just give you back your membership fee, we give you back double your membership fee. So we're going to give you back 100% return on the money that you're going to spend to join the community. Because if you can't even make back your membership fee, then that means that our platform and our program has failed you. Okay. And we wasted your time for a year. So join TTG knowing that you guys can have peace of mind with that double your money back guarantee. Our refund rate is less than 2.5%. That's why I have no problem offering you guys double your money back, because I honestly, truly don't believe that you need it. But it's there for peace of mind, and it's there to hold us accountable. So all you got to do is send a text message to the number at the bottom of your screen. It's 1-888-621-2127. You guys text that number right now if you're interested in joining True Trading. We got something real special for you guys. And you can join a community that's led by myself and 8 other professional traders. Myself, former award-winning hedge fund trader. Another one of our mods is a former market maker. Other mods been trading for 15 years, 20 years, doing this for a living. A company that received the best AI analysis tool from the Global Benzinga FinTech Awards. And also a company that has a direct data partnership agreement with the NASDAQ itself. You guys can just, be confident that when you're joining True Trading, you'll be joining a legitimate platform with over 10,000 members in 114 different countries, with partnerships with some of the biggest companies that are in this industry. Benzinga, TradingView, Trade Ideas, the CBOE, the NASDAQ, OpenAI. We have partnership agreements with a lot of these companies, and that's why we have their tools, their resources on our platform for you guys to use, and we implement all of that stuff. You have dark pool data, you have unusual options activity, you have options flow, short data, congressional trading data. All of this stuff is included with your membership. The Trade Ideas scanner, TradingView's charting software, Benzinga Pro's news feed, all included. If you pay for that stuff already, you don't need to pay for it anymore. You join True Trading if you get it. Just send that text message, 1-888-621-2127. It's going to save you guys money. I know how much those things cost. I know how much our membership costs. I know what the offer is that we're going to give you guys if you text in now. It's actually going to save you money, and you're going to get more. And you're going to get you'll be part of True Trading Group. So it's a no-brainer. All right, 1-888-621-2127. Anybody have any questions for me? What's your take on PayPal, Chipotle, UPS? Let's take a look. Those are 3 questions. I really don't like PayPal. I have no intention of owning PayPal. I don't know what the hell the issue is with PayPal. But investors, it's such a horribly performing stock. And I really can't figure out for the life of me why. I just know that it's performed so terribly. I just don't want it. I honestly can't give you any type of real insight into why the stock has performed so incredibly poorly over the last several years. I just don't want it. I don't want to own it. I can't really explain why they've done so poorly. I just know it's not a stock that I want to own. It's just done too poorly. And I don't see it. I don't see the growth. I don't see the turnaround story. They desperately need a turnaround story, and I just don't see the turnaround story. Chipotle. I like Chipotle. I think Chipotle is a buy in the mid 40s. Yes, it is disappointing that their old CEO left, because their old CEO was an absolute rock star. Just an unbelievable CEO, and the stock did insane under his watch. But he left Chipotle and went to Starbucks to help turn Starbucks around, which I think he will be successful in doing. And I am bullish on Starbucks for the next few years. But Chipotle is a wonderful business. They have proven to be very, very, very good in managing margins and managing costs, labor costs, food costs during the inflation wave of 22 into 23. They were one of the best companies in actually controlling margins and controlling those costs, cutting costs where they could, passing, costs on to the consumer in certain areas without the consumer really feeling it. So I think that, Chipotle, I think Chipotle is a good name. And I think, the mid to low 40s is a good spot. Last one you asked me about is UPS. I really do not like UPS. I think it's an insanely struggling business. And with the economy struggling and the economy slowing, I think UPS has more downside. I think you're going to see UPS maybe in the 90s. It's obviously Amazon has taken into UPS and FedEx and the Postal Service and everything else. And, I just don't see UPS growing and gaining market share. I just see them losing it. And if you think the economy is slowing, well, that means less shipping, less packages. So that means that there would be more downside on the name if you think the economy is going to slow further. I don't necessarily like UPS. If it gets to 90 or the low 90s, then I would say it's worth a buy, because 90 is such a massive level. If you take a look at this, 90 was the previous high in 2004. And then you broke above that in 2013. And it's been support ever since. There's the COVID low of right around 90 as well. There's 2018 and 19. So that's a really huge support level at 90. So, honestly, if UPS were to drop into this region, I would say, it would be okay to maybe just buy some, but I would put a stop loss at like 80. So if you buy like 95, 96, 97, you stop it out at 80 and just see if the stock is able to bounce from there. But I'm not a big fan of their business. I don't see the growth. I always think about the long-term portfolio, and I think to myself, okay, well, let's look 3 years from now, 5 years from now. Is UPS bigger and more profitable than it is today? I don't know. I don't necessarily think that is a foregone conclusion of a yes. Mike, if you had only $1,000, where would you put it for a long-term portfolio? I'd probably break it up into a couple different names. I don't like putting all of your money into one name. I would maybe look at maybe break it up into 5 different stocks. You get $200 a piece. I would probably be 3 tech names, 1 financial, 1 healthcare. I would maybe do like I would do a Palantir. I would maybe do an NVIDIA around 95 or 100. And maybe like a CrowdStrike or a Salesforce. So those would be your tech names, or a Broadcom. Actually, a Broadcom. I actually like to kind of stable it out a little, because Palantir will be volatile, NVIDIA will be pretty stable, Broadcom will be nice and stable. Not necessarily stable, but more stable than like a Salesforce or a Palantir would be. And then, financials, I like Wells Fargo over the next couple of years. I think Wells Fargo does well. You can't go wrong with JP Morgan. JP Morgan's best in breed. And then you have, healthcare. I really like ABBV, just made a new all-time high, pays a 3.5% dividend. It's like, I think it's my second largest healthcare position. I like AbbVie. You can also think about ETFs. IGV is an ETF that I like for the next several years. XLF is a good one for financials. So, you have some options. I hope that helps, Lynn. But I would never put everything into one basket. You want to spread things out just a little bit. Yeah, Meta too. Yeah, Andrea. I love Meta. I'm still very bullish on Meta long term. And it's not expensive. Like, valuation wise, you're not paying a really high valuation for Meta right now. Even with what Meta has done over the last couple of years, it's still not that expensive. When you look at their growth rate, their earnings growth, and you look at the valuation that you're paying, it's not that expensive. It's really not. And you've got this amazing support level here in like the mid to low 50s. That's a buy. My opinion, that's a buy. Look at this support level. Resistance. Then you broke above it. Okay, sure. Let's do it. Let's grab them. Let's buy it. I'm down. you know? And then if you get any, I mean, forget it. Back up the truck is 450. This is back the truck up for me. You know, I mean, we would need a recession for that to happen. You would need a recession because you would need advertising budgets, companies' advertising budgets. You would need them to plummet, and you would need a recession for that to happen. And then you can get down into this region, and this region is a back up the truck. This is, don't even bother asking me. The answer is yes. But I only think you see those prices with a recession. All right. So I think that's it, guys. And that kind of wraps things up here. Like I said, I am coming into tomorrow thinking, here's my plan for tomorrow. I'm just going to tell you right now. I'll give you some if this, then that. $555. See this level? See that? If tomorrow morning you wake up and the SPY is here and off the open, the SPY does that, I'm going long and I'm looking for the SPY to get back into all of this. Okay, I would look for a bounce back to take you back to at least like 559. And then you get this massive like 2.5% up day in the NASDAQ. It's going to happen. And it's going to happen when nobody expects it. Nothing goes down in a straight line. I'm not saying the bottom is in, but I'm just telling you, these last couple of days, I have been looking for signs of a bottom. I really haven't had we haven't gotten the confirmation yet of there being like a real significant bounce. And that's why I haven't held any of my longs. I have gone after longs the last 3 days. Yes, Vicus goes, really? Yes, really. I've gone after longs the last 3 days. We are oversold. Okay. And the last 3 days, I have somehow figured out I've found ways to make money long the last 3 days. Palantir, Meta, Tesla, the SPY. I've made money long. And I'm picking my spots. I'm waiting for potential bottoms, and I keep catching these moves. So like yesterday, I caught this move in the overall market, right? And then 2 days ago. Then yesterday, I caught this move in the overall market. But then when I don't get the follow through, I'm bailing on the position. I'm not holding it because I haven't had any confirmation. And then today, I caught this move. So these are the moves that I have caught long because I keep looking for that snapback relief rally, and we just haven't gotten it. So I've been nimble. I'm sticking and moving. I'm not holding these positions. I'm being prudent. When I get the profit, I take it. When it reaches resistance, if we don't break through those resistance levels, I don't wait around, right? I don't wait around. So like, I'll just show you, why did I not hold these positions? Because all of your resistance levels. So again, 2 days ago, I got long. Okay. I got long literally right in here. Okay. Not on the SPY itself, but on individual names. So I'm showing you the SPY. And my resistance level was right here. Okay. So I said, okay, well, I'm going to try the long. It looks like we're trying to bottom. I'm going to try the long. If we get through this level, I'm going to hold. And what happened? We got up to that level. And what happened? You failed it, right? See that? We failed. So I then exited. I took my profit and I left, right? I took my profit and I left. Okay. The next day, which was yesterday, I tried the long right here. I got long literally right there. Now, where is my resistance level? Again, right up here. Okay, there's my resistance level. There it is. I said, if we can break through that, I'm going to hold. What happens? We run right up into it, and you can see we top out, can't break it. Getting into the afternoon of the day. So that's it. I'm not holding it. I'm going to take we couldn't break. I'm going to take my profit. I'm going to get out. That's exactly what I did. Took my profit and I got out because there was no confirmation of us moving to the upside. Then today, I'm like, all right, looks like we're going to try to bounce. So I went ahead and I took the trade long. I got long literally right in here. Okay. I got long right inside here. And I said to myself, where's my resistance level? For me, my resistance level was 555. Why 555? Right here it is. 1, 2, and here's my resistance. And I said, if we get above this level, I'm going to hold. Well, what happened? We got right to that level and then rejected. So I said, okay, the hell with that. I'm going to take my profit and I'm going to leave. So I've made money long these last couple of days looking for looking for the relief rally. I just have not had any confirmation to hold it. So I'm just taking my singles and doubles, I'll hit singles and doubles all day long. But when we get the day, and I'm telling you now, it's going to come, and I think it's going to come very soon, you are going to get a 2 to 2.5% bounce in the market, and the NASDAQ specifically is going to lead that bounce. You're going to see the NASDAQ up 2 to 2.5% on the day, and that is the day I will try to be long and try to hold that and look for a little bit more of a follow-through move to the upside. We haven't had the follow-through the last couple of days. But I do think it's coming, and I'm just trying to be there for it. How far do I think the snapback goes? Mid to high 560s, I think is where we can go. Mid to high 560s, I think is where we can go. All right. No, Terry, I exited JP Morgan. I'm no longer in JP Morgan. All right. So there you guys have it, guys. That's it. That does it for me. Again, if you're not a member, text 1-888-621 2127. We'll tell you guys the special gift and discount that we have available for you. We'll tell you everything that's included in your membership, and you guys can get yourself ready and start trading with us. 10,000 members, 114 different countries. Let's go. All right. No, not long term. I still own JP Morgan long term. That was a day trade that the person was asking me about. I still own JP Morgan long term. All right. That's it, folks. Have a wonderful rest of your night. I'll see you guys all tomorrow. Take care.